Be live right now. I'm going to go ahead and kind of kick things off, and we'll go ahead and kind of do the presentation here. Um, you ready?
Yeah,
All right,
sure.
cool. All right. Hey, everybody. Thanks for watching the Ticker Talk. Today, we've got a very special guest of mine, Vince Vora. Welcome to the room. Go ahead and kind of get this shared really quick just so that we can go in and read a proper legal disclaimer. So should be able to see this. Vince, is this coming through okay for you?
It is. Yes, I can see it.
Very cool. So let me go ahead and read this out loud. Today's demonstration is designed to instruct in using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell any securities, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading securities. MetaStock, the Traders Forum LLC, and their employees disclaim all liability for any investment decisions by investors based on the use of the software, any trading strategies, or information provided in connection with the companies. MetaStock, the Traders Forum LLC, and their employees do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information contained today or contained in the presentation should be construed as investment advice or the solicitation to buy a security. So there we go. All right. That's what we've got for that for now. Vince, thanks for coming in and kind of doing this with us. It's good to have you. I often talk, we do a couple of sessions all the time, and I would say generally just to kind of introduce you a little bit. It's going to get nice here. But I would say just to introduce you a little bit, you've been a friend of MetaStock for a decade, more than a decade now. I would say that even personally for the trading that I do, some of the most important lessons I've actually learned from you. And if I want to kind of just qualify what those are a little bit, I like it how you kind of look at stocks that have kind of found or trade. I like how you look for support and resistance. One of the things that resonates really well for me is I love to find different patterns that are hitting all-time highs, because what you always say, and I always say it when we're kind of looking at them, is once a stock is hitting a new all-time high, it's bound to find a new all-time high. I like the specificity of kind of how you talk about money management and why it's important. And all that kind of stuff. So that's my introduction to you.
Great.
So there you go. Hey, Saki, welcome to the room. And if you guys have questions as you come in, let me know. Vince, I wanted to actually just let you talk to a little bit about yourself. And so we'll start there. Can you tell us about the background and kind of how you got started in trading?
Wow, it goes way back, almost 4 decades now. But I actually first got interested in the markets. I was in high school, and I was looking for work in the summer, some part-time work, and I went to a temp agency, and they found me a job at a major brokerage firm, filing, believe it or not. So I spent my days just putting documents in alphabetical order and shoving them in files. But where I was situated was across from an area where the firms, all the firms' traders were sitting. And so it was sort of behind a glass, but I could see all the commotion going on, and I they had the old ticker tapes up, and I don't know, it all made an impression on me. It was very exciting. So I spent a couple of months there, and then I went back and I finished school and everything. When I was done, I started taking the courses necessary to get my license, and eventually was hired by one of the big firms, and went from there. It's been an incredible ride. I actually did not start off looking at technical analysis at all. I was thinking more along the lines of, a Warren Buffett or so on, an investor, trying to find those undervalued plays, looking at financial statements and so on. But that didn't turn out very well for me. I mean, it took a huge loss one day. And so what I thought was no fault of my own at the time, looking back, absolutely, I made mistakes. I was very young. I was in my early 20s, and when I started doing this, and I really didn't know what I as much as I thought I knew. Obviously, when you're that age, you think you know a lot more.
You're
But,
invincible.
yeah, absolutely.
Yeah, right.
And especially if you start making some money, right? And which is what happened to me. So I'll tell the story. You've probably heard me tell this story in the past, but I would scour financial reports daily, looking for those solid companies with a track record of earnings, revenue, all of that stuff. And I came across this one company in the oil industry that on paper just looked fantastic. And they were really growing, but just starting out. And I remember buying the shares about 2.25 or so, or just over $2 a share is where I started buying them. And, with just a few $100s here, a few $100s there. And then it was going up. And, with every new earnings report, it would look even better. And I would add to my position and add to my position, and it would keep going up. And it just felt like, like you said, I felt invincible, and it was just incredible. And anyway, I built up a 6-figure position in this company at a very young age, and everything was going great until one day news came across the wire, and that said that I should say it was trading. I started buying it around 2 and change. It was trading around 14.5 when the news broke, and the news was that the CFO and the CEO were arrested for falsifying the books. Okay, so
Okay. It wasn't Enron, right?
No, it wasn't Enron.
Okay.
No.
Well, that's the most famous energy company that I could.
Yeah, and the stock was halted right before market open, because the news came out before market open. It remained halted till about late morning, 11:30 Eastern, when it started trading again. Unfortunately, when it started trading at 25 cents a share. So I lost everything. My account was blown up. It was, it was a huge hit for me. The mistake I made, obviously, was putting everything I had into one stock, right? But it seemed like such a great company at the time. I thought I knew what I was doing, and I took a big hit. So, then I went through all the emotions, the shock, the sadness, the anger, all of that. And then when I, got over it a few weeks later, I thought, okay, I can't rely on these financial statements. I mean, they were audited by a major accounting firm that everyone knows. They just can't be trusted. And that's when I started down the path of technical analysis. So it's been a long journey, but believe it or not, the worst thing that's happened to me was that trade in my career, but it actually ends up being one of the best things that happened to me, because it took me down the road of technical analysis. And since then, everything has been much better.
What was the trading that you started when you first initially started trading? Did you start trading as a firm, or did you do any trades for yourself first?
I did a few penny stocks and so on for myself that, lost everything there, but very small amounts. It was after I was licensed and was working for a while. I was actually, placing trades for clients, before I was doing my own thing.
Cool. Yeah. And then, so after kind of this little bit of a setback, let's call it that. But
Yeah.
after that, you kind of got into technical analysis. And
Absolutely.
what was kind of the first indicator? Do you remember the first indicator you learned about, or kind of the first methodology you started to kind of look at?
Yeah, I think it was just simple moving averages, really.
Okay. It's a good place to start.
Yeah, I think the first thing I looked at was, some individual moving averages, and then a ribbon, right? Where you try to get the moving averages stacked in the right order to try to identify a trend. I think that was my first method, the first thing that I used.
The rainbow chart.
Yeah, trying to get it.
Yeah.
Absolutely. But, again, another mistake, looking back all these years, is that from day one, like most people, I was looking for the Holy Grail, right? So back then, there weren't a lot of the same tools that we have now, a lot of these different charting platforms with all these indicators and so on. There were some some basic things. And then over the years, we started to get more and more and more. And so, I went down the path of looking at everything I could, different
Sure.
combinations, and spent a lot of time trying to find the perfect system where, looking back at it, it wasn't really necessary. I could have taken something very basic and just, made money with that one system. But it's been a fun ride for sure.
Yeah, I know over the years, this is kind of one of the things I thought would be cool to ask you about. Over the years, I think we've designed together. Actually, you give me the rules, and we coded it. But you've designed about 4 systems over the
Right.
years. How often do you find yourself changing up your methodologies? Is there a catalyst that makes you do that, or when it because a lot of people say, "Hey, stay disciplined, choose a rule set, stick to it, make sure you're following your rules."
Yes.
So how often and how do you have a process that you go about when you kind of start to kind of change the way you're trading?
Yeah. So what you were saying there about sticking to a set of rules and so on is absolutely correct. That's the way it should be. And in the past, before we worked together and designed these 4 systems, I used to go through systems very, very often. Only because, you take one, when you go through a rough patch, a few losing trades in a row, I'm thinking, oh, what's wrong with this? I go back, try to add something else and so on. But since we started working together, and I learned a lot more and gained a lot more experience. The only time I'm switching from one system to the next, or
Right.
adjusting a system here and there, is when something changes in the markets. Take, for example, Victory. I approached her, I think it was just before the pandemic, right?
Yeah.
Like 2019,
Yes.
when we talked about it. And my whole reasoning for going from Veracity to Victory there was the amount of volatility coming into the market. And I thought that was going to be a thing that I was going to have to deal with a lot more in the future. And I wanted a system that would be a lot more responsive to quick changes in the market. And I didn't think Veracity did enough of that for me. It's a great system, still works great today, but I wanted something that reacted a little quicker, and that's how Victory came about.
Interesting. Yeah, and I've got I pulled up a chart of the Dow just to kind of show people what Victory looks like. And we can look at a couple of charts if you want.
Sure.
I don't think we necessarily need to either. We'll just see if there is questions that come in. This is though the indicator that we designed, and it uses the 20 simple moving average.
Right.
One of the things that I thought was pretty cool in terms of the way that we implemented this is it looks at the weekly and the monthly charts as well. Gives you signals that you want to combine with basically the slope of this 20 period simple moving average. So it's a really, really cool system. It's been very popular. It's worked great. And we worked on just a new version that includes some new things. Vince, let me ask you this. Is there a particular indicator that you just couldn't trade without? Is there a go-to indicator that you're always looking at?
Yeah, it's the blue line you have on your screen, which is the 20 period simple moving average.
Right. Okay.
Very basic, but it actually, for the type of trading I do, which is more swing trading, I guess you'd call it position trading. I'm in a trade normally from a few days to a few weeks. It's just a great balance between short term and long term as far as the what that moving average is telling you, the activity. And the way I use it is more for momentum, to judge the amount of momentum behind a move. So
Right.
what I look for is slope in the direction of the trade for that moving average. Obviously, the formula is quite simple, right? It looks back at the last 20 candles or 20 open, high, low, close bars and averages out the move. And so if that moving average is sloping higher, it means price has been moving higher. And the higher the degree of slope, the sharper that move is, which gives you an indication of buying pressure. So to me, if I had to only trade with one indicator, that would be it. That would
Okay.
be it.
I feel like I could have guessed that answer. Just on you for a little bit.
Yeah.
I wanted to ask another little bit of a question. Like, and this is a question I like to ask because I think it kind of, especially if somebody's kind of watching this and they're brand new to trading,
Sure.
what is the advice that you'd have for like a brand new trader?
For a brand new trader, you know, spend your time or your money initially not actually trading but learning. And what I mean by that is the way I did it, where I was basically self-taught, watching videos, reading books, doing so on. You end up picking up a lot of bad habits, right? I relate this to golf. One time when I was at the firm training, we had clients. We would have to take them out golfing every once in a while, but I wasn't a golfer before I worked there, so I knew nothing about golf. And you know, in going out for a few rounds like that, not only did I embarrass myself, but I learned a lot of bad habits. So one day I decided, you know what, I'm going to go take lessons.
Mhm.
And I used to swing the golf left-handed. And when I went to the instructor, the first thing he said was, "Show me your swing." So I swung once. He stopped me. He took the club out of my hand and threw it away, and gave me a right-handed club.
Okay. All
And
right.
I said, This is insane." Like I played a lot of sports growing up, especially hockey and baseball, both of which I used a left-handed stick, and I swung my bat left-handed, right? So I thought it was just natural to do the same
Mhm.
with golf. And he showed me how to use the right-handed club, and from then on, I was much better. It was incredible, the difference. So
Yeah.
that's what I would suggest to someone new at this. You want to learn the basics. A lot of times you don't need a lot more than just the basics to make money, but you have to learn the right way to use the basics when it comes to trading. So you don't have to get into all these different sophisticated indicators. Just learn the basics of what price action is, higher highs, higher lows, what support resistance is, um, you know, and learn it the right way. So spend the time and the money investing in yourself initially before you go out and start to place trades. As you know, Jeff, trading yourself, another side to this that's hugely important is the psychological side, right?
Mhm. Oh, while we're talking about golf, though,
Yeah, go ahead.
two things. We once in a while we'll do a charity golf event here
Mhm.
at the company, and I'm always the highest scorer. But as you might imagine, I'm very sportsy. But one of the lessons that I learned, I'm happy to share with you, Vince, is
Sure.
you should always take an extra pair of socks when you're golfing,
Yeah.
and that's just in case you get a hole in one. Sorry, had to sneak it in. Let's talk about the psychology of trading.
Yeah, I mean, everyone hears that you should try to uh, remove your emotions from trading and just trade like a machine. The problem with that is we're human. We have emotions, and it's impossible to remove those emotions. So what you need to do is try to find a way, a set of rules and so on that can help you control your emotions. You're never going to get rid of your emotions, but when you're first starting out, if you don't learn to do things the right way, and you're gonna have some big winners, some big losers. You're gonna be all over the place. It's really gonna play on your emotions and your mindset. So that's what you want to try to avoid. Um,
Now, what
is
rules? What
Yeah,
rules do you think that you say that, and I kind of think, okay, well, I've got this, and like I like to keep a low position size. I like to know where my
yeah.
stop's going to be, that kind of stuff.
Mhm.
Are the rules that are those the type of rules that you're thinking about, or do you have something else in mind?
No, those are similar. I'll give you a few that have helped me after that big loss. the one thing I was worried about that affected me for years, for many years. I was scared to pull the trigger for a while just because I was scared to take another loss, a big loss. So I thought about it, and I thought, how do I make sure that I structure my trading plan in a way where it is absolutely impossible to ever take a big loss again? That's how my rules came about. And the main thing is controlling your position size, like you say. I teach a new student, I always ask them, if I ask you to put $5 in a trade, you probably wouldn't be affected by your emotions, right? Not much, correct? Like you're not going to sweat it.
Mm-hmm. Yeah.
You're not going to lose sleep over it. But if I ask you to put 50,000 into a trade, you might lose some sleep over it, or you might, as soon as you see the first red candle after it's gone your way, you're probably going to start to worry a little, and maybe get out of the trade too quickly, or you're going to make some kind of mistake because you're nervous about the amount of money that you have in there. So if you control your position size, it really helps control your emotions. So I always say that you never want to put any more than 5% of your account balance in any one trade. But what you ideally want to do is work your way down from 5 to 4.5, 4, 3.5, etc., all the way down to 1%. When you can get to the point where you're putting 1% of your account balance in any one trade and still be traded with a decent size, that's how you know you've made it. And when I say 5% or 1%, I'm not talking about the amount of risk like from your entry to your stop. I'm talking about the total amount that you're putting in there. Even though your stop, if you were to get stopped out, you might lose, 0.2% of your balance. That's not what I mean. I'm talking about the full amount because you can't control everything in the market. And there are situations where the stock can gap beyond your stop and so on. So there are situations where you can lose the full amount. And so if you were to lose 1% or 5%, you can recover from that very easily. And it also won't affect your psyche as much as it would to take a 20% loss, a 30, a 40% loss, let alone 100% loss like I took back then. So really position size is a huge part of this.
You also talk a little bit about total positions or total, in addition to that, you liked, and I'm trying to remember this, just remember, but you have rules about how many positions or how much of your account can kind of go into positions at a time.
Correct. For me, I never have more than 50% of my account balance active in the market at any one time. So if I'm putting 5% in any one trade, then that allows me to put on 10 trades maximum. And before I can look for another one, I have to sell a position, or I have to close a position out before I can open a new one. The reason why I do that, because someone might be thinking, well, why are you leaving half your account sitting there earning nothing, right? Well, first of all, in this environment, you are earning something because we are getting a decent interest rate on the cash sitting there. But secondly, and more importantly, the reason for that is because we can't control everything. So should we have some sort of black swan event, like, I hate bringing this up, but it's always the best example from my career, was 9/11, right? No one was anticipating that. No one could have expected that. Yet, when it happened before market hours. The market didn't open that day. It remained closed the rest of the week. And when it did open up the following week, things were down 50% from where they were the week before. So we never did have a chance to close out any orders. Whatever we had, whatever long as we had, open about 50% lower the following Monday. So to avoid that, I make sure that I'm always going to have money in my account to recover from any sort of loss, even if it is something more significant like a black swan event. So again, it's about sizing and about keeping some powder dry. So when it comes time, you can take advantage of whatever's out there.
I like that because it's not something people talk about a lot, right? But like you don't want to go all in every time, right? It doesn't work well when you lose. Like
That's right. And unfortunately, that's a mistake that a lot of the younger people make. People just starting out, and I see it now, especially when they're starting out trading in the crypto space, right?
oh yeah.
They're going all in, and if it works out, great. But when you lose it all, even though you've learned the lesson from there, you might have a bit more knowledge now than you did before. You have no more money to take advantage of it. So you're kind of taking yourself out of the game when you should be in the game more than ever now that you've learned a lesson or two, right? Because this is all about progressing. I mean, like I said, I've been at this for almost 4 decades, but there's still things I learn about the market. You never stop learning in this industry, especially with technical analysis. The same things work. The way the moving average worked 40 years ago, and we can still use it that way now. But there are different things that affect the markets that you have to be aware of. All the new issues coming in. Look at all these ETFs that have come into the market, right? A lot of people aren't even aware of how these ETFs operate, the rules behind them, and when they have positions or close out positions, etc. And on a day where there's news, we're going to get exaggerated moves one way or the other because of those instruments. And I haven't even talked about the quants and all the algorithms, the computer trading models that kick in at certain levels, right? So these aren't things that people normally think about. The people with less experience, I mean, they're thinking, am I buying a good stock, right? Is this company a good one? Is it going to move higher or not? But what are the other things about the market in general that can affect the movement of that particular stock, right? These are all things you have to incorporate. So there's a lot of learning to do in this industry.
For sure. And the nice thing of those, you can learn before you risk. You can always take it slow. I'm a big fan of buying a share or two and see how it goes, right?
Absolutely. I'm glad you said that. And there are certainly some great platforms that allow you to backtest and paper trade and so on. But even if you're going in, just buy 1 or 2 shares. You don't even have to buy a full lot. Just buy 1 or 2, just so you understand how the market works and what makes that particular stock move or not. And if you lose money, you're losing a few dollars. It's not a big deal, but you're in the game and you're learning, and that's what matters.
Another question for you. Sure. Let's say that you just said that, correct me if I'm wrong, I've been trying to pay attention, but I have ADD because I'm a product of the ADD. You said you had 10 maximum positions that you have. Would you say that you always have 10 positions, or like how many positions are you in on average?
Yeah, so to clarify, it'd be 10 if I'm putting 5% of my balance in any one trade. That way I'm not exceeding 50%, right?
Gotcha. Okay, right.
If I'm doing 1%, I can do a lot more and so on. But the main thing is that rarely am I at the maximum. I'm usually well under that. I'm usually at 4 or 5 positions at any one time.
All right. If you're kind of getting to the maximum and you're bullish, and you find another stock that you really like, you really want to buy it. Let's say that you're at 50%.
Correct.
Will you dump one so that you can buy that position?
Yes. What I will do is compare that one to something that I have open and look at what is going to give me the prospect of making more money. Because I may have a position on that's already moved a good distance and may have a limited range to go, where the other one is very promising. So I will close one out and open the other one. Open a new one and go beyond that 50% mark. regardless of how well the other ones are doing or so on. It doesn't matter. The other thing I want to mention
Okay.
is that normally, when I'm at the max, it's during a very strong trending market, right? So if we're in a strong bull market, like on your chart there.
Oh, I just took it down. Let me put it back up. Go ahead.
You know,
Here we
the
go.
Dow from like June to July there
Right.
was showing a straight line up, right? Yeah, there. And if the S&P, the Nasdaq, the Russell, we're all doing the same thing, and the market is really trending strongly, that might be a time where, you know, you get a lot more setups, and yeah, so there you go. So look at that move from say November of 2023.
Oh, that was great. Yeah.
Right. Exactly. So that's a time where typically you would max out, but even then, they wouldn't be all long positions. I always like to keep at least one or two in the opposite direction in case there's a swift sell off or some news that causes a move against me. Now, I'm not just going to take anything. They're going to have to match the rules. I'm going to be very, very selective and look for that. But typically, yeah, I'll have 7 or 8 to the long side and a couple to the short side when I'm maxed out. Yep.
Do you let's see, in terms of finding stocks, because I know you look at a lot of sectors, some of the stuff that we worked with on with sector. When I look to find a trade, I generally just, I run a scan against like the S&P 500,
Right.
the NASDAQ, the Dow, and I see what comes up. I take a look at it.
Yep.
Do you kind of use a similar approach, or do you kind of use more of a, hey, this sector seems to be doing well, the market seems to be doing well, and these are the companies? Like, what is the kind of the process that allows you to kind of drill down into the stock?
Yeah, I take a bit of a top-down approach where first I'll look at the index charts, the 4 main ones, the Dow, the S&P, the NASDAQ, and the Russell, and look at, what are those charts telling me? If it is a period like that November to April period where it was all pointing higher, great. Now I know which way the bias is in the market. Then I look at, I think there's about 12 different sectors that I look at, and I'll use the ETF charts. So, for example, XLF for the financials, right? So, and I'll do the same with Tex, XLK, etc. And normally, what you're going to see when you look at those main sectors is you're going to get 8 to 10 going along with the market, but you're also going to get 1 or 2 going in the opposite direction, right? Or just not, or just sort of consolidating and not doing a whole lot, right? So I will run my scan across, the S&P, the NASDAQ, and so on. Usually my scan, I use on MetaStock the optionable stocks.
Okay.
There's about 5,000 of them or so in that group. Yeah, exact. There, 5,600. So I will use that. But then when I sort of whittle it down and I narrow the focus, what I'm looking for or I'm hoping for are setups in the strongest sectors. And, for those 1 or 2 that I keep in the opposite direction, I'm looking for those sectors that are going against the grain right now. It's always great. For example, let's take gold as an example.
Okay.
Right?
Okay.
So recently, if you look at gold, and can you switch to a monthly chart?
Oh, absolutely. I was actually you said recently, and I was going to go closer. I'm going to look at monthly right now.
Yeah, let's look at monthly. There was a break. So you see that recent consolidation from like 2021 to 2021?
Right here.
Yeah, if you draw a line, a trend line across those highs.
Let me undo what I just did because I didn't need to do that. All right. Let's do this here. So
across the highs.
Yeah, let's grab this.
Yeah, perfect.
Kind of right here. Yeah.
Yep. So now if you can zoom into that area at the far right a little. So what I was waiting for a while is to see an actual breakout out of that pattern, out of that channel that you drew. Now there are a couple of breakouts that didn't really go anywhere, Um, yeah. Now, see there's 3 in total. Okay.
Right.
But
One,
there's a real
2, 3.
difference. Exactly. But there's a real difference between the first 2 and the third one. Okay.
Okay.
So if you look at the first one, we broke through. Okay. Now, just to give you an idea of how I handle potential breakouts, what I'm looking for is a bar to close outside of the range. So that first green bar there.
Right here. Yep.
Exactly. Then I will mark the high. And if we can clear the high, that's when I will go in with half a position, not a full position, half a position.
Okay.
The reason being is a lot of times they come back to retest that level or they fail there at that level.
Okay.
Like this one did. This one pulled back, but it could not hold that level, that upper trend line. It broke back below it. Okay.
Okay. Gotcha.
So
That makes sense to me.
when that happens and you get stopped out, it's a small loss. It's nothing big. Okay. If it were to just take off and never retrace and just take off, you still have a half position, which will end up being good money anyway when you get a nice run. Okay. Now, the same thing happened on the second one, right? It broke through, it triggered the trade, but then it failed immediately. Okay.
Right.
The third one, what happened is it followed through, it closed there, followed through. So we put on a half position. Then it came back to that trend line again, but this time it held support and bounced. So it was a proper retest. Now, if you can move over to your left a little.
Yep.
Yeah, there. So the third time it broke above that upper trend there, and then it came back and it retested that line. See, yeah, right there.
Right.
See that?
Right here.
Right.
Actually, I'm going to remove this one just because I think that might be confusing. Like, so yeah, here we come up.
So we added the first half when it first broke, pulled back.
Yeah.
When it pulled back and retested that line successfully, we added the second half. Okay.
Right. Which would be right here.
Exactly.
Okay.
And so now from that point on, okay, there's a few other things going on with this chart. Number one is you have that 20 period moving average that is sloping higher, correct?
Right.
While we break out of a long-winded channel, we also had the victory system telling us we're in bullish mode, right? In green.
Yes.
But the other thing is that whenever you're in a channel, if you go draw a line or measure from the start of the channel to when you break out, okay?
I use our measuring tools.
Yeah.
So what you're looking for is kind of the length of this, I think is what you're saying.
Correct. Right about there. That's right. So now what we're looking at is a similar move in the upward direction now. So since the channel carried on for, a while, there is a very lengthy channel.
About 98 bars. Yeah.
Yeah. So we should see a pretty big move. Exactly. If you do that, not straight up, sort of on a 45-degree angle, that's what we would expect. Okay. And a lot of times what you will notice is the move prior to the consolidation is most likely very similar in size. So if you go to that uptrend move just before the consolidation, all right,
let's look. Okay, right here.
Yeah. Okay. So if you measure that, what we should be seeing is a move at a minimum, similar in size to that move, to the upside.
This one right here.
Exactly.
Okay.
So if you take that and move it over from where we are now, or the breakout point, then that is the kind of move we would be expecting. Okay. Now, there's a few ways you can play this. You can play gold itself, right? Or you could start looking at gold ETFs, and more importantly, the companies that make up those ETFs. So look at the smaller companies. You can look at the big names and the small names in the gold sector. What you'll find is usually the big names are already looking very similar to the chart of gold.
Sure.
But some of the smaller ones are well behind. And what you'll notice if you start scanning those night after night is that you'll start getting trigger after trigger as those catch up to what gold and the bigger names are doing. So when you see a breakout like that, not only is it exciting because you can trade that issue like that, but you know that over the next several months, you know exactly where to look for opportunities, and you usually come out with some pretty nice moves.
I have a question for you in terms of this trade. Let's go back to where we were talking about right here with a third of a position based on kind of what you're talking about.
I actually no. Let me clarify.
Okay.
So when that triggered, I put on half position.
Okay.
But when it pulled back and went below that upper trend line, that's when I was stopped out of the trade. So I closed that at a loss.
Okay. That's what I was going to say is because usually when I'm buying, because I'm looking for a breakout, I'll treat this line as support and resistance. So if this fails, that's where I get out. I just wanted to make sure. I was under the impression when you're talking through it that you still held on to that position.
No, but that's the difference between the third one and the first two is the third one did hold that line, right?
Right.
And that's when we knew something had changed. And now we start, it
turned into support, Vince.
That's right. Exactly. And because the channel carried on for a while, there is significant support there, right?
Yeah.
Which is great to have when we're trying to get in a long trade. You want support behind you. You just don't want any resistance overhead. Right.
When you got started in trading, who would you say would be significant mentors to you? Who did you look up to, and who did you say?
No one you would know is people that I worked with, traders that I worked with at the firm. The one thing that they taught me that I was focused on unnecessarily, I think, for a very long time, was that you don't necessarily need a strong win rate. A lot of people now that, we're selling systems like this, the questions I get every day is, what's your win rate? Well, what's your track record and so on, right? But what they're looking for is they're hoping I say, oh, I win 80-90% of my trades, right?
Right, sure.
Realistically, you don't need a high percentage win rate. What you need to do is make sure your losses are small and then allow your winners to run. Now, I know we've heard this a million times and it's a lot easier said than done. But when you're capping your losses, the way we were on these trades here, very small, it doesn't take a huge win to overcome those losses. So the gentleman I'm talking about that I learned the most about, his win rate was 38%. So if I were to tell you I had a 38% win rate, you would automatically assume I lose money in the market. Well, he would make millions in the market. And that's because he kept his losses very, very small, but his winners would be huge. So
I think even if you look at the turtles, like the turtle traders, they were well under 50. They were well under half.
Right.
But they just, the idea is to kind of let your profits run and cut your losses.
Exactly. So that's where support and resistance really plays a big factor, right? When you don't have resistance overhead, you have an open road. It's easy for that stock to move, and you can allow that thing to run. When you have support behind you, that's a great thing, because even if it turns on you, even if there's some kind of news, it'll act as support enough, giving you enough time to get out of there before it causes you a bigger loss, right? So you need to factor in support and resistance in any trading plan, in my opinion.
Let's see. Obviously, the next question, I'm going to throw a huge grain of salt in there because the markets change. And they dramatically change. We always let the markets tell us what they're going to do. But between now and, let's say, the end of the year with the election going on and that kind of stuff, would you say that you're overly optimistic about the market? Optimistic, bearish, extremely bearish? Like, what do you kind of expect without anything successful, like without any black swan events for the rest of the year?
So this is a great question. And I've got a couple. I can give you my honest answer. I can give you the answer that I think you want to hear.
I want to hear the honest answer.
The honest answer is I have no idea.
True.
Right? Yeah. I have absolutely no idea. So here's the way I approach it. A lot of people, especially investors and fundamental traders, they'll scoff at technical analysis because they think, oh, you're looking at the past and you're looking for patterns to repeat themselves. It makes no sense, and so on. But technical analysis is not just a bunch of lines on a chart. What technical analysis is what people are actually doing with their money. They're not opinions, right? We can all have opinions. So if I tell you that I think the market's going higher from now to year end, that's great. That's my opinion. And you can say, okay, well, he's got a lot of experience. Maybe he knows something more than I do. And that may be the case. But what the chart will actually tell you is where and how investors all over the world are actually investing their money. That is why something as simple as a moving average that's sloping higher will tell you what's actually happening with that stock. So, can you put on a chart of Carvana, CVNA? Okay, so Carvana, as an example, Carvana, to me, and put on a weekly or a monthly, maybe a monthly. Carvana for me initially was kind of a silly concept, selling cars through a vending machine kind of thing, right? So not something that I could logically put my money behind if I just think of the concept, right? At least that's the way it was for me. So again, if I had an opinion on this stock, I would say no, this is a bad investment. I wouldn't do it. Yet, if you look at that recent run, there was money to be made there, right? Now, also there, if you followed this while it was going lower and then started to turn around, at that point, the financials were nothing to be excited about. And there was just not a lot of good news out on the company and so on. Yet, for some reason, it found a bottom and it started climbing higher. So why is that? It's not a matter of opinions. It's a matter of what people are actually doing with their money. There's someone putting money into this, right? Obviously, a lot more than one person, but institutions that trade with a lot bigger size than any retail trader does can actually move the markets. And it could be multiple institutions doing it. But whatever it is, we don't need to know why. We just need to know what is happening. And the tools that we use, like a simple moving average, like the victory indicator, etc., will help us identify what's happening there. So that initial move from below the 20 to above the 20, right? So if you follow it from
or here,
over there, it crossed, and then look at that first retest of the 20. It actually dipped back below the 20, didn't it? Right? Now it moves up again, but this time it holds. And now also, if you look at the previous high from that where it dipped back below, that's right. And you draw a line across the other high, right? Now you got a few different things happening there. Exactly. So now, not only do you have a successful retest where it showed you that the 20 is now holding support, it's actually acting as support and it's holding, but now you have a breakout above prior highs, at least 3 or 4 different prior highs there. Okay. So what you're looking for is a stock when it goes through a major trend up, it'll then kind of consolidate or form some sort of top, and then it'll collapse and it'll come down, and then it'll go through a period of consolidation or some, while it forms some sort of bottom. And then once it breaks out of that, you're in for more upside. So that right there was a great entry to start playing Carvana, regardless of what their financials look like, regardless of, what my opinion was or anybody else's opinion was. It was clear that there was buying. happening here, and buyers were in control, and that's all we need to know. So the most important thing as a technical trader, in my opinion, is number one, to identify a clear trend, right, in the market.
Right.
And number two, to identify the strength of that trend. And we do that by using a combination of these rules. And then, it takes us to a place where we are looking for the same pattern over and over again. But it's not just because it's some squiggly line that looks good. It's because there is meaning behind that pattern, right? And that's what we're trying to do on a daily basis.
That's good info. I have do you trade around earnings? If you, let's say you're taking a look at this chart and you notice that earnings is like on Thursday, are you going to wait? Actually, it is Thursday, so that's a bad day.
No.
But let's say it's next Thursday.
Yeah.
Like, was that something that you're going to wait to see how the earnings shake out? Is it something that you pay attention to?
Yeah, I have very specific rules around that. So I will avoid the actual earnings event, meaning I have not been able, over my almost 40 years in the market, been able to find a reliable method or technique to tell me which way that stock is going to move after the earnings announcement. It's extremely unpredictable. I have no idea. So if I'm about to open, like if this was at the point where it's just about to break out and earnings date was coming up, I would need at least 10 days, if not longer, before that earnings event to enter the order. So if it was less than 10 days to the next earnings event, I would not open that order, regardless of how good it looked. Okay. But
as soon as earnings come out, let's say it is 10 days away, are you clear as soon as that earnings has kind of been factored in the next bar, or is it going to be a couple bars after?
No. So what I'll do is I'll get into the trade, but then the day before earnings, I'll do one of two things. I'll either close out the position or I'll go delta neutral on the position. So for example, if I have, I like to the options.
Okay.
And if it's just stock, if you're holding just a stock, you don't have to go delta neutral, but you can protect yourself with a put, right? The day before. More often than not, it's easier to just close it out and then reopen it after earnings if you need to. But if say I'm holding a call that has a delta of 70 on it the day before earnings, so I'll evaluate and I'll look at my position. If I have a nice gain, I'll probably just take it off. If not, I'll look for a 70 delta put. I'll put that on, and then whichever way it moves after earnings, the gap, it's going to work out more or less the same for me, right?
Okay. Right.
I mean, there will be some theta decay, some implied vol crush, right? But then I'll take one of those off, depending on which way I think it's gonna move next, right?
Makes sense.
So
would you say that all of your trades are options, or most of them?
I would say 98% of my trades are options. Yeah.
Okay. Interesting. Okay.
Yeah.
Cool. Oh, I want to kind of talk a little bit about you for a minute. So just for people can find you at tradingwins.com, right?
That's correct. And a lot of people, they misspell the wins part. It's not like the wind, W-I-N-D. It's just W-I-N-S, tradingwins.com. Correct.
I'm going to put this in chat just so that we have it. But we also will put it up on the YouTube when we kind of get this video all nice and pretty. Mm-hmm. Yeah, put it up on the YouTube. We'll make sure that it kind of gets there. Greg, please. Also,
and if anyone needs to get a hold of me by email, it's just info@tradingwins.com. They can email us anytime.
Cool. I will say this, and this is just, we probably have about a dozen employees that are on Vince's service because I'll sign them up. Just because, like, one of the things that I think is very, very helpful for people is, well, Vince. I think Vince has Vince, I'm just going to kind of tell you how much I respect you for a second. But you probably see just kind of how well Vince is at articulating exactly kind of what he's looking for and what he's looking at. And I think that a lot of the stuff that you teach is very applicable regardless. I've had things I've added a lot of things that you'd like to kind of look for and talk about and stuff like that in the trading I do. And so every time somebody that we have, like Greg is a great example, uh, he's kind of learning about the markets, kind of getting his feet wet in the markets. And I'm like, well, let's get you let's get you on this Vince's service so that you kind of get a really clear idea from somebody I think that's very, very good at it, as opposed to me. So that's why we probably do have at least half a dozen people that just are part of that. I get his newsletter. It's great. You go on there and you do your sessions. Is it 3 times a week?
3 times a week on Zoom. That's right.
Okay.
Mondays, Wednesdays, and Fridays, we get together with our members for at least an hour.
Yeah, we have a lot of our own customers that subscribe to it as well. It's a great service. I'd recommend it. So there you go. Go ahead.
Sorry, go ahead.
I was going to say www.tradingwins.com.
Yeah, I was just going to say it's a lot of fun and it's a great spot to get your questions answered. It's not just all about, say, my technique and so on. It's about everyone becoming better traders. So I realize that everyone has a different style, right? For example, I'm one of the most conservative traders you will find out there, but I know there's a lot of traders out there that are a lot more aggressive. So, but as I mentioned earlier, I've been at this for almost 40 years. So, that forum of coming on the Zoom call, not only do we look for trade setups using Victory and my techniques, but we share ideas. We get questions from very inexperienced traders to very experienced traders. We have members with us that have been with us for over 8 years that have been on those calls, every single one. They're on there religiously, and they have a lot of experience. We actually have a few members that are money managers. They manage money for others. And so they're very experienced individuals. And so the questions lead to other topics that lead to great learning experiences. And we also discuss the economy, what the Fed is doing, how it's going to impact things, the housing numbers, the jobs numbers, all those things get thrown in. And they're really interesting sessions. Jeff, it'd be great to have you on those sessions every once in a while.
Sure. Good talk.
It'd be a lot of fun. Yeah.
Cool. All right. Let's see. Well, that's been an hour. We usually go a little bit shorter than that, but I enjoyed it. I want to say thank you, Vince, for coming in and spending some time with us. Always great. I appreciate, I've said this every time, but I appreciate all the work we've done over the years, the help you've been to me personally with my own trading and professionally with kind of all these great methodologies. Thank you for everything.
Thank you. MetaStock's been a great partner over the years. Continuing working with all of you, and you especially have been great. And these things are so at any time. Thanks for the invite.
All right. Lastly, if you're watching on YouTube, make sure to like and subscribe. We do lessons, interviews, stuff like this all the time. We are working on a new forum that we're putting together, the Traders Forum. It's a market chat where you can talk to other traders, learn about the markets. A lot of the stuff up there is absolutely free. So check it out, thetradersforum.com. Thanks everybody for watching. Like, subscribe. It helps a great deal. And we'll see you again soon. Thank you again, Vince.
Thank you. Take care.
All right.